Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. We have a lot to look at this week, so we're going to hop right into it. But first, I want to give a big shout out to everyone that joined us for the Cyber Trader Workshop this past week. It was amazing. One of the most educated groups of traders we've worked with, and excited to work with a lot of you guys in the future. Now, like I said earlier, we've got a lot to look at today, so I'm going to run through it pretty quickly, but don't worry for you guys that are on the platform. We're going to come back during the week and review these in the live rooms, I'm sure, on a daily basis. And for you guys that watch here on YouTube, many of these opportunities are longer trading opportunities, so we'll probably double back and check them out in future videos as well. So make sure you're subscribed and make sure you stay in the loop each and every week with this video. Let's start here on the pound yen. And this is one that we looked at in the workshop. And we're looking for a structure-based trade here. You can see on the pound yen, I'm going to go ahead and delete some of my drawing tools. We've come into a previous level of structure support. If I just start my drawing right back here on the left and just go sideways, right, you're going to see this is a pretty important level in the market. And remember, one of the things we talked about in the workshop is that the market has a very long memory. It's good at identifying important levels, remembering important levels, and those levels tend to be important in the future as well. And you can just look at what we've done here in the past. We've come down to previous structure support a little bit. We broke past it. It acted as resistance a few times, came back above it, acted as support again. And then more recently in the last month or so, 1, 2, 3, 4, 5, and now we're down here for a sixth touch, right? Now, I don't necessarily subscribe to the idea that the more times the level of structure is hit, the more important it is. But I do like to look at the stories that the price action tells me when you get to these levels. And right now we're coming to it. We have a nice rejection candle so far right here. If we dig down one time frame to the hourly, you're going to see a nice hold. We did end up trading above it. So what I would be looking for down here is another double bottom type of action, meaning that price action gives us one more test. The sellers try to push it down once again. We get another rejection at this level and then look to trade it back up. So a nice structure-based buying opportunity here on the pound dollar, 4 hour, 1 hour, whatever your time preference is. Next, we're heading over to the dollar Canada. Going to start here on the daily chart. And we have an interesting situation on the dollar Canada, right? We spoke about kind of the rules that we have of how price acts when we get the key levels of structure. And you can see that we have a break and close above structure right here. Now, per my rules, a break above, close above allows me to make the prediction that price is likely to go higher. So you're asking, well, Akil, if price is likely to go higher, how come you're looking for a short opportunity? Well, my mentors taught me something very special when I learned how to trade. It was a nice, simple phrase that said, look left, structure leaves clues. In fact, every time I go to London, I see it in the streets where they say, look left, and I think I'm in a trade, and I get all weird and have a higher likelihood of getting hit. But that's a me problem, not a you problem. If we look left here, you'll see that we have another higher overlapping previous level of structure. And for me personally, when I see overlapping levels of structure, the furthest one away, in this case the higher one, is always the more important one, as the smaller one is actually a zone that many new traders get tricked into. They put their stop loss right at that zone, they get skunked out, and then the market reverses at the higher zone. So we could look at this zone between our level of structure that we just violated and our higher level of structure. And I'll draw out a little box here for you to see it. And I'm looking for a counter trend trading opportunity in this area. And here's what we have that is pretty interesting, right? You know, we haven't spoke about this in a while here, but I'm a big student of harmonics. I got started in the market with simple market harmonics and adding to that harmonic patterns, advanced patterns. And it's something that I keep in my arsenal along with price action. And we have a very harmonic level lining up here. And what I'm going to do is this. I'm going to take my line tool and I'm going to draw a move from this swing low to this swing high. Right? I'm going to copy and paste that and put it on the retracement. This is what's called an AB equals CD pattern, or a equal measure move, or at least a projected one. And you're going to see that AB equals CD1 or AB equals CD pattern or projected move is going to come right up here about 139.69, right at the top of the zone we laid out. Well, I'm going to do one more thing as well. I'm going to take that same type of tool, right, my line tool, and measure it from my swing low here, my bigger move, to my swing high. I'll copy and paste that once again, add it to this retracement, And look at that. We have another AB equals CD pattern, one-to-one measure move lining up in the same place. So both a bigger and a smaller harmonic move lining up right at the top of structure. This is going to be a place that I have heavily on my radar for a potential short selling opportunity. Next up, we're heading over to the Aussie dollar, and this is a tricky one because this is a trading opportunity that doesn't necessarily line up with my higher time frame analysis, but I think it could be a sneaky good one. And it doesn't line up with my higher time frame analysis just because of the general location of price, right? If I zoom out my chart a little bit and I bring in my horizontal line tool, you'll see that price has come down right to this minor level of structure right here, and we've held, right? So I don't necessarily have a belief that price is likely to continue lower. With that being said, we've been in a pretty decent consolidation between 65s and 62.70s for a very, very long time now, where price has bounced up and down. And just because there's not a kind of a bigger trend that's present doesn't mean that we have to avoid kind of these short-term mercenary type of moves. And we'll see that as we get down to the 4 hour and the 1 hour, right? The 4 hour here, price did give us a lower low, lower close, right? But again, I'm the higher time frame. I'm not necessarily believing or predicting that we're going to continue lower, but it does give us a nice kind of base point to shoot for with potential targets. Since then, price action has retraced, and we put in this really nice rejection candle here, right? Price action went up, 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 up. And then we put in this nice bearish candles, right? For you guys that were in the webinar on day one, I taught you about reading a candlestick, the story that it kind of prints out for us, right? Well, do your homework and think about, what does this green candle tell us right here? Even the one before it. What does this green candle tell us right here? And then add to that the next sentence. What does this green candle, this doji candle tell us right here? And then go to the next sentence. What does this red candle tell us right there? And then boom, you're putting sentences together. You're forming paragraphs. Paragraphs are helping you understand the chapters. Chapters help you understand the story. I know this may sound crazy if you're unfamiliar with my philosophy on reading a price chart, but if you're at the workshop or if you've ever heard any of my lessons on kind of how to read a price chart, it's a little bit out there, a little bit different, but it seems to mesh well and really connect with a lot of people, which is why I like spreading it. And it's the way I personally think about it. And, I'm always going to teach the way I personally think. But we have a nice rejection candle here, and we followed it up with a lower low, lower close, giving us a nice confirmation. If we go down to the 1 hour, just real quick, Jason spoke about this in the webinar as well. We had some nice divergence on the hourly where price action was making a steady move to the upside, right? Higher highs all over that chart. And then we look at our relative strength index, right? This is my indicator of choice. You're going to see that price action is actually making lower highs here. So this is called bearish divergence. You can add that to your score as well. So it's an interesting opportunity here because, again, I'm not looking for anything long term, but if you were an aggressive trader, and let's say you were to do something like this, where you take a short at market, you put stops right above that rejection candle, because honestly, if price goes above that level, you're most likely wrong. You can look for a retest of the lows here and end up with a pretty decent risk reward. So that's something I would keep on my radar, especially if you are an aggressive trader. Another option would be waiting for a retest, maybe a double top, and that could potentially, boom, give you an even greater risk reward. But of course, with that more conservative entry comes a less likelihood that it actually occurs, because this can easily, if I can drag this thing, there we go. This can easily kind of just go straight down without you being aboard. And that's kind of the balance that we have to find as traders. Speaking of balance, if you guys didn't check it out already, Trading Coach Podcast, episode 886, called Trading Requirements, spoke a little bit about that balance, about balancing your trading opportunity versus risk reward, basically kind of finding that mesh point between great risk, bad trading opportunity, great trading opportunity, bad risk, and how to balance that and decide what to take. So make sure you check that one out. Again, Trading Coach Podcast, episode 886. Episode 884 was a really popular one as well. This one was called Which Pairs Are Best and Worst for New Traders, where I kind of take you through the personalities of each pair. So 2 episodes if you're looking for something to listen to start your week. Heading over to the Euro Aussie next. This is a pair, again, we spoke about this, it feels like months ago now, but it couldn't have been that long. It had to be September, which I guess is months ago. We're close to November. About a continuation up. If you guys remember this, we spoke about the head and shoulders pattern that existed here. Before that, we spoke about coming down into this previous level of structure, right? And then we got the head and shoulders, we reversed after that, rallied up just as we predicted, and now we're back down again. So we still have this this bigger bullish outlook here. And I'll tell you what's happening next, right? Right now, we have a consolidation pattern happening, right? And we just got our 4 points. Someone in the webinar asked about trend lines. I'm not a really big trend line fan, but when I do, right, I don't always draw trend lines, but when I do, I connect wick to wick. So the high right here to the high right there, and then the low right here to the low right there, right? And this is going to be a triangle or a wedge pattern where we have kind of a condensing type of pattern, right? We call this a contraction pattern where the market is kind of shrinking up, it's coiling, and then contraction leads to expansion. We expect like a explosion. So imagine like, I was going to say crushing atoms, I guess is one thing, but a simpler explanation. Imagine like taking a spring in between your hands or your fingers and you're crunching it. Eventually, right? You have so much power within that string that boom, it has to kind of be let out. And these patterns are the same thing where we see this range start big and wide, and then it gets smaller and smaller and smaller and smaller and smaller until we eventually break out. Now, in general, these pattern formations are neutral, meaning that there's no real way to decide, if it's going to break to the upside or the downside. So you want to wait for the break and then react to it that way. But in this particular situation, again, we do have that bigger bias. So having that bigger bullish bias may allow you to get in more aggressively. Following up on that is going to be the pound New Zealand. Very similar situation here, right? You can see kind of the wedge pattern that is forming. This one's a little bit more complete than the Euro Aussie. We can also pop up to the higher time frame, the daily real quick, and see that we're in more of a neutral standpoint here, right? Price action came, we hit this rejection candle up here to kind of stop our bullish move, and then we retraced downwards, looking like we created new structural lows, but then we double bottomed and moved back up. So we're literally right in the middle. So where the Euro Aussie, we had a clear bullish bias. This one is called a, right, you got me type of deal. So more reason for this one, instead of kind of loading up and anticipating which way the breakout is going to come, wait for price to show you, right? Price will tell us the answer. We just have to be patient and not lose our money and jump the gun beforehand. And that's one of the problems that many traders do, is they get the FOMO, right? We spoke about the webinar, right? They get too aggressive and then they don't wait for confirmation and boom, they're done. Now, one thing I would do in this situation, right, is we can do something like this. We can bring in our volume indicator from the swing high to the swing low of this range. No surprise that our consolidation pattern right here is happening at a volume spike. But if you're trying to make a prediction on where price is likely to expand to next, just look for the next volume spikes, right? If we look kind of to the right over here, we can see, boom, right in this level. Again, just kind of look right there. If I can draw this on accurate to the downside, right in this level right here, retest of that double bottom. Look right there. So if you're bullish, right, you're looking for an opportunity there. If you're bearish, looking for an opportunity there. A nice, easy way to set up your profit target levels if you're looking to catch this breakout pattern. Now we're going to head over to an index, right? One of the main questions that we got from so many of our traders in the Cyber Trader Workshop was, we were teaching technical analysis, we were teaching a strategy, doing all that fun stuff, and they're asking, well, can we use this on crypto? Can we use this in the stock market? And the answer is yes, right? The skill, right, and big emphasis on the word skill, the skill of technical analysis can allow you to become dangerous in any market. Anything that has price action will follow the rules of technical analysis. Now, with that being said, whether you're going from market to market or even pair to pair within a specific market or asset to asset within a specific market, understand that not everything is going to work with your system, your strategy, your indicator the same way, right? You may have to use a faster indicator setting on a certain chart. You may have to use a looser one on another chart. You may have a trendy chart where double tops and double bottoms just get broken out all the time and never work. You may have a consolidative chart where, advanced patterns kill it, but they don't kill it on another chart because it's very directional, right? This is why we do the back testing. This is why we do the work. This is why we acquire the data and crunch the numbers. That way we're just not blindly going into situations hoping that something works. We actually have hardcore data that tells us this specific thing works this specific way on this specific asset. But as far as your kind of classical charting patterns, support, resistance, supply and demand, all that stuff, right? It's going to work the same across the board. And if you know the skill of technical analysis, you're going to be able to read and interpret any market. If you know the skill of trading, you'll be able to find out what works and what doesn't. So this kind of takes us full circle back to the first one. We're talking about support and resistance type of trade, right? You can see basically the same thing as, pound yen is happening on this index. This is the FTSE, by the way. You can see we're coming down into a previous level of structure support. We're right back into that level. This is an awesome opportunity to look for a buying opportunity if price shows us that structure will hold, right? We don't know that support will hold. We can easily blow through this on the open. This is why we want to keep our powder dry until the market has given us every signal. A lot of rookie traders will see this and they'll just buy it right away. Ooh, it's an awesome level, let's buy it, right? Professional traders will wait for their reason for entry, whatever that is, right? It could be a single candlestick, it could be a candlestick combination, it could be a simple pattern, it could be an advanced pattern. Speaking of advanced patterns, I think we have a butterfly here. I didn't really look at this when I measured it out, just looking at support and resistance. But if we throw on some Fibonacci's, I think we're gonna have a butterfly. Look at that, boom, right down there. X to A, swing low to swing high, A to B, B to C, and a CD completion right down here at our 127. Look left, structure leaves clues. Dead smack in the middle of that structure level as well. So if you're someone that trades a CTS, right, combined technical scoring system, you've got structure, you've got an advanced pattern, you can add points to that and build your score. Look at that. The funny things you find when you know how to read a price chart. Now, perfect scenario to follow up on that. If you look at the Dow Jones here, we're in a slightly different scenario, right? Where the FTSE is at structure and looking to hold. The Dow Jones has blown past structure. Same butterfly pattern, right? We came here, we bounced up. This one's a little bit advanced, so a little ahead of the FTSE right now. But you can see our most recent close that closed the week was a break and close below our previous level of structure. So instead of looking for a buying opportunity at structure, the break and close below allows me to make the prediction that price is likely to continue lower. I'm looking for a continuation lower to retest our structure lows right here. So throughout the week, if we go down to a lower time frame, what I would look for is one of two things. One, if I am a counter trend trader, so a trader that is looking to trade in the opposite direction of the market, I am looking for a continuation down here. I am waiting for price action to test these lows down in this area, and I'm looking for buying opportunities as we get to this level, right? This 200 level. These were the fibs that we drew on in the workshop. We talked about the 1618, right? Golden mean. We talked about the 200 mark. Look at that. We stopped right on a dime there. Again, these things aren't magic, but they work pretty darn good, and they're very psychological. But a counter trend trader looking to buy would wait for price action to get down to this level, right, 31.5s, and then look to buy it up. The other opportunity would be a continuation trade, right? Previous structure support, we would expect to act as resistance. So if we get a little bit of relief in the market, meaning a little bit of a retracement, we'll look for price action to work its way back into that level. We'll look for signs of exhaustion, a sign of reversal as we get to that level, and then look to take our opportunity in trading the extension down to that same level that the counter trend traders are looking at. So the level that the counter trend traders are looking to buy would be the level that the trend continuation traders are looking to take profit. And I always say this, right? It doesn't matter what type of trader you are, counter trend, trend continuation, the skill of reading a price chart and how you read the price chart is going to be the same for both. So if you can master this skill, you will become extremely dangerous in the market. If you can master your psychology as well, you'll be an extremely profitable trader. Remember to hit that like button before you leave. Hit that subscribe button as well if you're new. We're going to follow up on these opportunities during the week and probably next week in the next Trading Edge video as well. Also, make sure you check out my podcast, right? The Trading Coach podcast comes out 3 times a week, every Monday, Wednesday, and Friday. They are topics based on what you guys tell me you want to hear about. So if you have any suggestions, you can leave them in the comment section below.